and many thanks for joining us on this fresh episode of Africa Business Weekly as we throw the spotlight on some of the biggest conversations that shaped the world of business this week. I'm Akio Bakeye. Our highlights from West Africa this week covers Ghana's first coupon payment on matured bonds under the first phase of the country's domestic debt exchange program. And from our East Africa desk, we'll bring you an exclusive with the governor of the National Bank of Rwanda on agreements reached on the currency convertibility by governors from central banks in East Africa. But let's get right into the conversation for the day, and Palesa is on standby for regional updates from South Africa. Hello, Palesa.
This week, Zimbabweans took to the polls to vote in presidential and parliamentary elections, and my colleague CNBC Africa's Godfrey Mutizwa spoke to Batana Matiga, Director of Insights and Research at Mark & Associates Consulting Group, for his view on the contentious political climate in the country. Let's watch.
I think there's been a lot of campaign activity, a lot of excitement about tomorrow's elections. I think the key highlight is, most of the proceedings, especially the rallies and the gatherings, were sort of peaceful. So we expect, the same, environment tomorrow as people actually vote tomorrow.
Is there an expectation, Batanai, that the outcome is up in the air?
I think, of course, if you're just looking at the two main parties, that's ZANU-PF and CCC, I think this time around, the takeaway is that it's sort of going to be quite tight because both parties are quite strong in different ways. If you're looking at ZANU-PF, of course, they have a strong story around, the liberation struggle, land reform, and they were strong, especially in rural areas. But also on the other hand, CCC, these are, a youthful party. They have a strong following in urban areas and also amongst, the youth. So we expect it to be a tight race. I think that's the sentiment that we're picking up on the ground.
Past elections in Zimbabwe have been marred by accusations of violence as well as the credibility of the election process itself. Are we looking at a different environment this time around?
Yes, I think with the current government, I think their approach is quite different in terms of how they are dealing with issues around fairness, around peaceful elections, and also just free campaigning. I think the stage is open to anyone or any party really who's push their agenda. So really, I think it's quite different in terms of how they're handling things on the ground, just compared to the previous administration.
Yeah. Earlier, you spoke about the messaging that's coming from the ruling party, the Land From program. You spoke about also, of course, the work that the government says it has done in terms of the infrastructure rebuild. And I wanted to know what the opposition is promising and how credible those promises are. I remember, I think it was a few years ago, we heard of bullet trains and some very exciting things.
Of course, I know when candidates are campaigning, of course they can always put out those kind of statements. But if you're just looking at the last 5 years, of course, there's been a lot of issues around the economy itself in terms of stability, inflation, and the like. But we've seen certain positives around agricultural production, investments in mining, and just infrastructure development projects. I think going forward, the thrust really is to try and maintain that stability and probably work around issues to do with the debt overhang and trying to finance some of these infrastructure projects with long-term money. I think that's the constraint that the current government has been dealing with.
Yeah, I was hoping you'd give me an insight as well into what the opposition is promising, Batanai.
So the agenda or what the opposition is trying to put out, really, I think they've come up with a card around, fighting corruption, and just promoting equality across different socioeconomic groups. So that's one. Second, I think their card is also around re-engagement and probably dealing with economic sanctions. I think that's the sort of the dark spot when you're basically looking at ZANU-PF and its relations, especially with Western countries. So CCC has really been pushing that agenda, trying to sort of come up with measures around re-engagement and things like that. So that's what they're campaigning around, and of course, they're talking about employment creation and dealing, of course, with the informal economy, given the state of our country.
Yeah, but you watch the economy perhaps more closely than I do, and you have a better sense of the kind of changes that we're seeing on the ground, also in terms of the promises that are coming through from the political parties. I wanted to get a sense from you how you think the future looks like, whoever wins out of this, in terms of the ability to engage the international community and normalize those relations, and then perhaps begin to talk about reviving this economy.
Yes. So I think elections are a key economic event, especially when it comes to the outlook generally, because what we are hoping for, I think a lot of individuals and even households are hoping for an accepted result. So it doesn't matter who wins. By the end of the day, it has to be free, fair, and once it's accepted by the broader international community, then we can talk about re-engagement and also addressing certain issues around economic sanctions. So that's the hope that we continue to have in terms of just having a good or an acceptable election outcome.
And in more news, moving markets in the Southern African region this week, CNBC Africa's Fifi Peters spoke to the Secretary General of the African Continental Free Trade Area Secretariat, Wamkele Mene, on the sidelines of the BRICS summit here in Sandton, Johannesburg, about expanding the free trade with the bloc. Let's listen in.
Well, first, I am most grateful that we've been invited as the AFCFTA and the African Union, because this is, as you said, a BRICS event. We're happy to be here. The theme that has been identified, which is essentially setting out how the BRICS countries will engage the rest of the African countries beyond South Africa, is indeed very encouraging. Because if you look at the economic profile of BRICS countries, the export capacity, the contribution to global trade, the contribution to global output, it's quite significant. And so the partnership, the investment partnership, the industrial development partnership, all of these partnerships that have the potential to come out of this event, in my view, position the BRICS countries and African countries in general for a very, very bright economic engagement.
Turning that hope and opportunity into reality. So I just wanted to maybe drill in a little bit more on the specifics in terms of the excitement or not of some of our BRICS partners in trading under the AFCFTA. What are some of them saying? It's early days, they're still waiting to see what that looks like, perhaps a little bit more incentives need to be put on the table. If you can just give us that color, sir.
What I'm hearing is a curiosity about this market. 1.3 billion people with a combined GDP of $3.4 trillion, projected by the year 2050 to be over 16 trillion United States dollars. So clearly these are factors that investors from BRICS countries are taking into account. The fact that there is a fast growing dynamic region of the world that they now have an opportunity to explore. So I'm very encouraged by what I've heard in the panel discussions and, of course, in the bilateral meetings also. I believe that we will see, and I hope we see, commitments in infrastructure development, we see commitments in industrial development, and more trade access between the two regions. So it's a very, very good start and a very, very encouraging start, and I'm most grateful that the African Union and the AFCFTA that we've been invited.
And that's all from my side.
Thanks for the update there, Palesa. Up next, we now cross over to East Africa for more content. And Sarah is on standby. It's over to you, Sarah.
Thank you. For the East African region this week, we start off in Rwanda. The governor of the National Bank of Rwanda, John Rwangombwa, told CNBC Africa that an agreement reached on the currency convertibility by the governors from central banks across the East African region earlier this year will be key to easing trade. Here's more on that conversation.
And even way back in February, we took decisions last year. And by Feb, the last decision we took to increase was in Feb, and a total increase of 2.5% points by then. And normal policy rates have an impact with a lag of about 3 quarters or so. So we started seeing inflation coming down from December. That's when we peaked the curve in November, and it started the downward trend from December. So and even from the beginning of the year, we had communicated that we expected to see inflation continuing to increase till the end of the year before the curve turns downwards at the beginning of this year. And this is what we've seen. Peaking at 21.7 in November and started going down. Was sticky in first half quarter of the year at around 20.2%, I think, on average. So that's now started going down, and when we communicated to you in May, we slowed down our tightening because we saw the curve was going down, and that time we expect to have a good agriculture performance for season B, which was supposed to kick in June this year. Unfortunately, the agriculture performance wasn't as good as we had expected. So food inflation has remained high, as above 40%, coming from around 58 to about 40%. So that defied from our projections. Though inflation has continued to come down, today, on average, I think last quarter we had I think more than 15%. So today, July we're at 11.9%, and we expect this trend to continue to an average of 7.6% in quarter 4, which is within our band. But we see risks. In fact, we said we expect this to continue to 7.6 average for fourth quarter and an average of 4.7% to be specific. We said around 5%, but the specific number is 4.7% for 2024, which is really within our targets. But we see risks around weather conditions still, so we are not yet sure of what will happen with season A. These projections are on the assumption that we have a normal agricultural performance for season A starting next year. Also, the geopolitical situation still remains uncertain, with Russia, I think, pulling out of the grain deal. And so there's still a lot of uncertainties around the global geopolitical conditions. So that might affect the commodity prices or global inflation. So normally the trends are all going down for global inflation. So all these are expected to contribute to normalization of inflation here next year. But because of these uncertainties, we decided to tighten further, at least to cushion any uncertainty that could be seen going forward. So that's the basis of our decision. Otherwise, when we look at the trend, it is really in the right direction, is what we had expected. And we expect to see inflation coming down to our benchmark of 5%.
And Governor, how about I think there are concerns around the energy index, much as it is in the previous quarter. You also, especially with the rallying prices in global gasoline prices and the recent upward adjustment, how much could that weigh down on the inflation, for instance, by the end of this year?
Okay, when we look at, there has been those movements, but we follow the global projection by the IMF normally informs our projections. We are not experts in global economic conditions. We normally follow these global institutions. So at least it is maintained that we see reduction of fuel, the oil index this year, and that gives us, I know there are these movements between 80, 70 and that, but overall we expect to see reduction going for the whole year.
And how much, let's talk about the lending rates. When you look at the lending rates have edged up a little bit, and the deposit rates have sort of declined. Is that what you anticipated?
No, if anything, deposit rates have increased. So the lending rates are the ones that are a bit sticky up to now. So we saw the short-term money market rates increasing in line with our policy rate decisions. The interbank rate has increased by about 2.2 percentage points compared to our 2.5 that were increased. The deposit rates is increasing by more than 1 percentage point. The lending rates are still sticky, almost just 0.2, I think. So, but it normally happens with a lag. So the fact that all the other interest rates are picking up, so we expect, depending on if things normalize next year, maybe we may not see that increase because there are different factors that determine the banks increasing their rate. It's not just, our financial system is not that developed to the fact that immediately they move in line with our policy rates. But at least the other underlying rates are already moving, and in the medium term, we would expect to see the lending rates of banks increasing as well, depending on what happens in the following year. If things normalize, maybe they won't increase.
This is the fourth consecutive week the central bank has rejected what you could call expensive bids. Could this be an indication of investors demanding higher premiums, maybe to compensate for the higher inflationary environment?
No, if anything, we've seen increase in government rates. This is also maybe what I should have said that has really shown or where our policy rate is transmitting. We saw increase in government rates. T-bills, I think, moved more than 2 percentage points since we started increasing. And even the bonds, when you look at the yield curve, all the bonds have increased by 1 percentage point or around there. Almost all yields from 3 years to 20 years have increased. So the rejection is just distortionary offers. That's what we reject. But normally, there has been that increase, and we are not surprised to see that. So it's only those that are outliers and distortionary that we don't take.
Can you say the same for the bond market? Because when you look at the last 2 bond auctions, they were subscribed both in July and in June. What does that say about the market?
It was just an issue of liquidity. But it's not really about the interest rates as such, because interest rates have been increasing. And for the bond market also, it also depends, because the bond market is done by book building. It's not like, so it's the market that determines the interest, and depending on the average interest, that's what is offered. And maybe some investors don't like it.
From the East African team this week, it's back to you.
Thanks, Sarah. We now bring our regional focus back to West Africa. Ghana's Deputy Finance Minister John Kuma says the payment of the first coupon under the Domestic Debt Exchange Program is a testament to the government's commitment to the success of the program. Now, this comes after the government failed to meet its borrowing target in last week's Treasury Bills auction. Yomi Akiola, the head of research division at Sapong Capital, shares some insight into what to expect as momentum builds into the second phase of the debt swap deal. Take a listen.
then there had to be some restructuring done, especially as the coupon rates were getting really, really high. So yeah, they did bite the bullet and just get through it. It was a tough conversation, and there's still conversations ongoing. So the first tranche, or the first phase, resulted in sort of restructuring of about 82 billion Ghana cedis, and then now they've moved on to sort of the USD denominated bonds and the cocoa bills, which they've recently extended. So they were supposed to close that offer on the 4th of August. They've extended it to the 25th, this Friday, 25th of August. So it's in tranches and it's in phases, starting with the domestic side. The external side, the conversations are still ongoing.
Yeah, we'll get to that. I know nothing has been said yet. Obviously, they have to get all the creditors to the table. Now, for the bondholders themselves, holding the domestic bonds, let's talk about the confidence, what this has done, and the process for the bondholders themselves. I mean, you invest in a sovereign and you expect that, when the due dates come, you get paid. But then also speak to, the transparency of the process. The government has said that they're committed, but is there liquidity to back that up?
Okay, so it's been a very frustrating process for individual bondholders and even for some corporates who are heavy in government securities. Over the next couple of years, the government hopes to ramp up some liquidity to continue to boost this confidence. Now, for instance, this 2.4 billion that was paid was a significant milestone for the government. There's another 2.4 billion due in 6 months, February 2024. Once we see that level of consistency alongside the fiscal consolidation efforts and transparency from the government as stipulated as part of the IMF conditions, I think we'll slowly, gradually get our necks out of the woods.
How confident are, analysts, the markets, in the government's ability, on the fiscal side now, to raise enough when it comes to domestic revenue mobilization? We've seen some number of tax reforms that have actually, according to the Ghana Revenue Authority, been yielding fruit, the gaming, e-tax levy, etc. Painful for Ghanaians, but government is raising money. But confidence levels in terms of how much they can gather?
So it's actually a bit of a catch-22 where everyone's being squeezed on all the sides. So they're raising taxes, the man on the street is feeling the pinch. But at the same time, things like utility tariffs that are being increased are required so that they're able to repay sort of the power generation companies which have bills denominated in foreign currencies. So it's a bit of a catch-22. So yes, they need to pay the bills as a government. You pass someone to the man on the street. It's an uncomfortable place to be, without mincing words. But these things have to happen. Now we just need to find a balance in terms of communication between the government and the people. In terms of finding some level ground. Now,
for the external debt restructuring, that hasn't been spoken of at all. But obviously, I know the creditors are watching or have been watching how the government has engaged with bondholders at the domestic level. But what are your expectations in terms of success? I mean, they knew that the government they simply didn't have the money, and investors had to take a haircut. And do you think they'll be expecting separate treatment, or would be expecting some kind of a haircut?
Well, for starters, payments on external debt have been suspended since the start of the year, so they've already taken a bit of a hit. True. On that. Conversations are ongoing. I know there are committees handling it or having these conversations in different regions from Europe, America, and sub-Saharan Africa as well. But I think most importantly is them coming to some agreement with the government, and soon. The sooner we can get that out of the way, the quicker we can get on our way to recovery.
Next up, Nigeria's newly inaugurated cabinet under the new administration are already setting action points and interventions under their portfolios as they give insights into reforms expected in the coming days. Chamberlain Peter Sai, the CEO of Excellent Capital Advisory, and Akokwe Baje, CEO of RCC Advisory, shared their thoughts on the policy priorities for the new cabinet. Take a listen.
Edu is one of the brighter stars in the cabinet. He's familiar with the terrain. He's an investment banker. He has been commissioner at the sub-regional level. And I think he is familiar with the challenges. The challenges are tougher, I think, with the news from JP Morgan and that analysis than many assumed initially. The reserves are significantly lower. But I think the priorities would have to be around quickly inflowing some significant sums of dollars, foreign currency into the economy, possibly considering asset sales around the country's public assets, oil assets, and all of that. Some form of restructure. I think we need a lot of international support from the multilaterals, from all of our international partners. But we need to quickly calm down the market. I think the $3 billion the NNPC got from Afrexim would have gone a little bit in that direction, but clearly much more is needed.
And talking about much more being needed now, we also saw the fact that the Naira has fallen once again. Now it's inched closer against the greenback to about $900 to 900 Naira to $1 at this point in time now. So how do you think that would also pan out in the coming days?
So that's clearly we're not close to equilibrium in the exchange rate space, and I'm not yet until we see tangible
injection
inflows of significant sums of dollars. That equilibrium may still be some way further down the line.
Okay, let's bring in now Mr. Peterside. I would like to have your line of thought now. At this point in time, let's pick, for example, the perfect number 7. The top 7 ministers whose details, portfolios, will likely help steer the Nigerian economy to a better ground now. One of the elements we've heard so far is reforms helping to attract a steady external funding. How critical is this? How do we go around this? We've heard words from the Minister of Power. We've heard words from the Minister of Solid Minerals saying that we're going to see better utilization and exploration of these resources. The Minister of Trade and Investment, Doris Anete, has already said Nigeria is ready and open for business. Are we truly set for these reforms?
Okay, thank you, David. I believe that we're ready somewhat. It's just a function of, additional steps that we should be taking in the immediate term. On a scale of preference, I would say the Minister of Finance stands out as the key person. He happens to also be the coordinating Minister of the Economy, so he happens to be the key person that will be driving macroeconomic growth as well as foreign direct investment flow. The second would be the Minister for Trade and Investments. And then the third for me would be the Minister for Telecommunications and the Digital Economy. We've seen, David, in recent years that we've had a good, significant inflow of foreign direct investments into the digital sector. The fintech, the health tech, ed tech had done quite well. In fact, they had began to comparatively attract good investments that would probably top 2 billion thereabout. And if you rank them, that might be the top 3 investment flow into the country. So that makes that ministry extremely crucial. On the macro side, David, you have to realize the debt burden and the recent news by JP Morgan that the external reserves are significantly lower than we thought.
And on that note, it's a wrap on this week's show. Many thanks to Palesa and Sarah for the regional update. Join us same time next week for more interesting conversations. I'm Akio Bakeye. To enjoy your weekend.